Wow, technical difficulties had me feeling some type of way, running around like an absolute crazy person. Guys, welcome to the live stream. It's Wednesday, you know what it's all about. Guys, let me know, have you been through the quantum growth program series right on YouTube? If you have, let me know in the chat. Super powerful information, and a lot of what I'm going to be doing today and going through, you would need that as a backbone to obviously understand what it is what we're doing. As well, guys, if you're brand new, make sure you've hit that subscribe button, the bell notification, turn on notifications, so when new content is released or I go live, you're the first to know, and we don't have to send messages and go all kinds of crazy things. Right, so just I want to make sure everybody in here watching right now is obviously subscribed. Super important. Okay, guys, so we're gonna have a jam-packed day. There's quite a lot I'm going to be covering today. We're going to start off with some of the fundamentals. We're going to jump into some markets. I'm seeing some beautiful opportunities that we can take a ton of advantage of. So I just want to make sure everybody's hearing me, seeing me. I apologize for the technical difficulties. I connected Facebook and de-linked, and it was now sending it to Facebook and scheduling the stream. Yeah, the beauties of technology. All right, beautiful. So if everybody's hearing me and seeing me, there is a little bit of a delay on the chat today. I've opted for quality, and that does unfortunately make the delay just a little bit bigger, probably around about 20 seconds, I estimate at this point. But again, make sure you've hit that subscribe button. Most importantly, make sure you've got that bell notification enabled so you never miss anything that we do. There's going to be crazy things happening over the next couple days. I'm going to be going live without any notice, sometimes in the evenings. So this evening I'm going to be trying something a little bit different, something I've never tried before, and I'm hoping you guys are going to like it. So most of you know that I enjoy gaming. Obviously spent money on the setup. No one would do that in their right mind if they don't game. So this evening I'm going to be gaming and trading same time. So we're going to be running around shooting people and making trades in the market. So if that's something that interests you, and it'll be a little bit more of a relaxed environment, so I can read the chats, I can respond to you guys, you can ask me whatever you want, we can laugh, we can joke, we can have a good time. So remember to obviously make sure that bell notification is enabled so we can obviously do more of that. So I think without further ado, guys, let's just jump straight in. I want to show you guys what's happening in the markets, and what we're going to do is we're going to just jump in first and have a look at some of the fundamentals. What are the items we need to look out for. Something pretty crazy that I want to talk about yesterday. So for my master students that were live with me yesterday, same time, we got that negative dollar data, which obviously didn't coincide with the gold trade that we were looking at. Now, I just saw an article just after we ended the stream. A major news house, I tried to find the article but I missed it. Major news house said dollars weakening, is it the end of the dollar? And when I saw that news item, I had absolute confidence in our short position on gold, because obviously we unfortunately know that these big news houses circulate media to obviously get a bias in terms of where people should be on a trade. And gold just absolutely fell through the floor, guys. If you took that gold position with me, we are currently, as of today, and I'll show you guys the trade, we over 300 pips per position in the last 24 hours on that gold trade. So gold has fallen through the floor. We're going to look for opportunities again on gold. We're going to be looking at ZAR today. I'm going to be taking you guys through a gold and oil correlation setup. I get a lot of questions offline of people ask me about what is the correlation between the price of Brent crude or crude oil and gold, and how does that work? How do we, and the reason we're going to be going through that is there is some fundamentals coming up this evening with regards to oil. So I thought this would be an amazing opportunity to show you guys that correlation and how we can utilize that to our advantage. All right, so in the chat, guys, I see the chat. We have Gilbert in the house, Kenneth Batandwa, RKS 11, we've got Joseph in the house, we've got Abel, we've got CR, Analela, we've got Gilbert, we've got Joshua's in the house, Abel, I'm going all the way up, we've got Amanda Wilkinson. Guys, make sure, as I've said, that you've got that subscribe button hit. If you don't know where it is, it's just below the stream. You should be able to find it. Okay, beautiful. So guys, thank you for joining me. Let's jump straight into what we're going to be partaking in today. So if you guys are ready, I'm going to let that music build up and we're going to jump straight into the fundamentals. Okay, beautiful, guys. So let's have a look at what we're busy looking at here. I'm going to disable the chat just for a little bit in terms of being visible on the screen. Let's go like that. Beautiful. Okay, so we had a fairly mixed bag this morning. We had a bit of news, a bit of data that you guys might want to know about. So outside of the Australian dollar, pulling in some very poor retail sales, which we do know this new variant of the coronis is obviously hurting the world right now. And I've got to avoid saying the full word because apparently you get problems on YouTube when speaking about these things. Okay, so the one that's probably most noteworthy for all of us, specifically if you're living in or around Southern Africa, is that we posted some pretty impressive ZAR data this morning. Now, we're going to be looking at ZAR as well. And this is again why I tell you ZAR will make you pull your head out, because we've received all this bad data over this last period. We've seen massive negative data over ZAR, and we've just seen ZAR gaining strength over the riots, over all of these things that we've seen over the past week. Now we get positive data, and I'll show you how badly ZAR is busy weakening, and there is an opportunity there. Again, there's a long-term opportunity buy on ZAR, which we are going to be looking at. Outside of that, guys, we are going to be focusing a little bit on this afternoon, late afternoon, evenings data, and this is going to be heating, gas, crude supplies and inventories. Okay, now where the correlation comes in, and I'm going to be giving you guys a great article if you guys love math. I know there's some of you who love your math and equations, and that's not for me. I'm going to be giving you an extract which I found in my archives from a while back, and I found it once again. But in essence, it's a really great summary in terms of what the type of correlation is when it comes to oil and it comes to gold, right? And how to read these correlations, the probabilities, the standard deviations. Again, if you are somebody who really likes math, this thing will be right up your alley, and you're really able to see the science and not just the general trend direction. Now, for that reason, we're going to be combining two things when it comes to that, right? We're going to be combining the price of the United States dollar in terms of its the dollar index, and then we're going to be looking at what we could get from this evening's data that could support a further long-term trade on gold. So just to recap and look at the trade we took live yesterday on gold, this was the trade and this was the setup, right? Not super complicated. We had a trend on gold. This was the impulse, so we had a nice downwards trend. We started to correct towards the top side, which ultimately gave us an opportunity, which is what I was looking at for a potential short. Now, a few people have asked me what has led to looking at that short. Now, we are looking at this on a 15-minute time frame just to get that granular detail. But the thing I want you to notice is this weakness in this market at this particular spot here. Now, we did get that news yesterday at 2:30 on the weakening dollar, and as we know, a weaker dollar will afford to buy less and less gold, and so XAU USD will obviously pick up. The price of gold will pick up as the dollar weakens. So we got that negative dollar news. Gold went up to this area and hovered and got, in terms of our Fibonacci retracement, but then ultimately reversed, and at a 4:30 yesterday evening, gold just fell through the floor and has continued to fall to where we are at the moment. So gold, if you're a master student of mine and you took this with me yesterday, you should be in about, at its peak earlier a few minutes ago, it was around about 300 pips per position, but we are settling out at about 100, 260, 270 pips, depending where you entered. I entered very early. If you entered a little bit late, higher up, you could be much more. You could be in well over 300 pips at this point in time. But what does this mean, and how do we utilize the crude oil inventories to look for a potential position? Now, based on what we're seeing over here, I am going to probably opt out and end up going for an opportunity where I'm going to take some of my profits on these gold trades, right? I think I'm going to end up closing, or the safer route here is I'm going to pull my stop loss, my entry position, over the next level of resistance. And we can see here the 23.6 is going to be our next area of resistance, our Fibonacci level, and so we're going to basically protect this trade. If it takes us out, it's going to take us out for 150, close to 200 pips, but if it doesn't and continues downside, then obviously we can hold on to that. Now, the reason I'm protecting this trade is we're starting to see some price action here that might give us an indication of a reversal right now, around about in the next 5 minutes to next hour on gold. The same way we used the dollar domination strategy in terms of entering yesterday afternoon for the sell, we are going to then potentially look at now what we end up seeing, because obviously we can see that pin bar that's busy forming right there. Again, this is a 15-minute time frame. That pin bar right there with a little bit of price action, I'll drop down a little bit smaller. So there was a couple questions. I think Gilbert asked me and a few people asked me and said, listen, in terms of the story of price, great, we've got it, but how do we identify these smaller positions, right? Or these scalp opportunities? These scalp opportunities and smaller positions are going to be mostly visible depending on the type of asset you're looking at. So example, on VIX, we have a very, very high pip count. Okay, so a 15-minute time frame will be equal to around about an hour time frame on a major currency pair, because in 15 minutes, VIX covers the same amount of pips as what a major currency pair would cover in about an hour. So the candles in terms of detail are more or less the same, 15 to an hour on a major. So we will drop down to a 15 minutes on VIX, and all we need to do, and this is a trick anybody can use, and if you're starting out on trading, I would highly recommend this. Here's your trade right here. You want to trade VIX? There's the trade right there. Okay, so that rejection down on a 15 minutes, we immediately see that pin bar. There is, sorry, this is gold. So gold and VIX, sorry guys, gold and VIX both have high pip counts. VIX got a much higher pip count than gold. But have a look at what's happening on gold here. If we drop down to 5 minutes, there's our entry point. Okay, so if gold goes through this resistance level, we're in a long-term buy. When I say long-term, we're going to be in a buy pretty much until this evening, potentially even tomorrow. That is why I'm protecting my original sell position. That's all the way up here, with a stop loss just above our next resistance level, because if we get through that, I want to be out of this trade. I actually might even protect it even further, to be honest. I'm going to use this level, and I'm identifying this level based on that, and I'm sure if we zoom out here, we will get some past data that does it for me. Let's just have a look here. Do we get more past data? Yeah, so we've got a fairly strong level, not the strongest of levels I've ever seen, but that's perfectly fine. We're well into profit. Our entry point is all the way up here yesterday afternoon, so we're well into profit. I'm going to protect my position at that point. Now, how do you trade this? You're busy, you've got a job, you've got things to do, and you can't sit around and look at the charts, because that's the mistake most people make, is they get into a chart or they're looking at a trade and they look at it on a minute time frame and they're looking at every single tick. As we can see, it's trying to get out of the structure, and I'll show you how we trade this as well if it gets out of the structure. So ultimately what we need to now do is you have a life, you can't sit behind the charts 24/7. I would go in here and create alerts north, right, and south of the structure. So left and right of that structure, I'll create an alert, and if price hits that, my system will go crazy. So my system will notify me and say, hey, price is busy breaking out, price is trying to do something crazy. And that way I'm not sitting looking at one particular chart the whole time. Now, how could this affect gold? And I'm looking at gold not for a buy or sell now, for the reason being that I want those crude inventories to come out, because I feel like a buy or sell now could be premature. We saw yesterday, we were expecting the sell to happen at about 2:30, and that sell only materialized closer to 3:30. For that reason, I want to be cautious today about just an early entry. You could have, for 15 minutes, have already identified that pin bar. Even that first one would have been a good indication. That second one would have pushed you into a little bit of trouble. Welcome, Flora, and thank you for subscribing. So I would have then looked at that second bar there, but obviously that would have put you into trouble. That would have obviously that would have scared you, right? So yeah, you could have entered it already as a buy and you would have covered and already been in profit. But again, as we know, we want to wait for that 230, 245 mark. Now, going back to some of the fundamentals in terms of what we're looking for on the crude oil inventories. So when crude oil inventories decline, okay, so when there's a at this point here, in terms of reading and understanding the fundamentals, we can see here that there is a 7.897 million barrel inventory. Okay, so there is a deficit in terms of an inventory. The forecast is that there'll be a negative 4.4 million barrel inventory. So they're showing that inventories are going to increase, and this can be due to a couple of reasons. It can be due to production, but it can also be due to a decreased demand on crude oil, right, which is the negative side of things. Now, if the crude oil inventories come out less than, right, the forecast, that will show a positive for crude oil, and there'll be a positive knock-on effect for gold. So as an example, should we show a crude oil inventory of negative 5, so this is in millions, right? So it's 4 points whatever. So if we see a figure here of negative 5 points, whatever the case may be, that will show a decline in inventories further than what was expected. Okay, and that will be positive for oil, and there'll be a positive knock-on effect for gold. If that is the case, I would then look to position myself at 430, because we know that we're either going to see a move 230, 330, ultimately around about 430. So I am hearing an alert, which is a good thing, and that means we can start to have a look at what is happening on gold. And as we can see here, the reason why I didn't want to get into this prematurely is we are getting that bit of a press down back into structure. Okay, now should we get inventories that are more than expected, so we get a massive increase in inventories showing that there's less of a supply, less of a draw on some of these reserves for crude oil, that will be negative for crude, and it will also be negative for gold. And this would support our current short position and how we would position ourselves would be the following. Okay, let me show you guys really quickly. So again, a buy would just be outside of the structure. So positive data would mean we would just buy outside of the structure. We can see we try to get out of the structure, we're getting rejected at this point in time. Okay, remember, we don't have to just buy on the exit of a structure. We can allow structure to break, and there will always be a new market formation, right? Anytime a structure is broken, we see a new part of a market. I don't want to hover on gold for too long, but I just want to show you what would be the event where we have negative oil data, which has a negative impact on gold. Let me just show you what we would end up doing here. Okay. Let's have a look at this chart. Okay. All right, so what we're going to end up then looking for from in terms of the actual gold setup itself, we then need to start to identify our next levels of support, so that when we get a break thereof, we can then obviously start to look for a short position. Now, we are and do obviously have a market bottom where gold touched on previously, and that's going to read as $1,796 to an ounce of gold. So $1,796 to an ounce of gold. So that would be where we would want to look for a potential short. And again, potentially, maybe let me explain yesterday why we are in this continuation of this downwards trend. We have this impulse downside and a correction to the top side. So the reason we were looking for a short is that we were correcting up to the 61.8, and there was a probability that we would reject there, or maybe target the 78.6 and then start that fall. So we are in the next leg of the market. So from a trending perspective, the trend is our friend in terms of a sell. We have a friend here in terms of a sell position. So I wouldn't really want to look for buy outlooks right now, and I'm going to show you why. Because oil can be one factor, but the other factor is the dollar index, right? Because we have XAU USD, so we have gold, XAU, and USD. So the two parties involved in this position in terms of where it goes is gold and the United States dollar. So let's jump into United States dollar. Beautiful. And guys, remember, if you have not subscribed yet, make sure you hit that subscribe button, and I will then see you guys obviously as and when we go live and we do things. We will then have a subscribe then pop up that you can obviously get all the notifications and the things that you want. Okay, so let's have a look here. Right, the dollar index. Okay, so I found something pretty interesting on the dollar index. I'm going to talk you guys through this. Potentially for those of you that are seeing this for the very first time, we'll talk about this. So what is the dollar index? The dollar index is a basketed index of all currencies linked to the United States dollar, right? So all items linked to the United States dollar. So euro, pound, yen, and it's mostly weighed against the euro, mostly weighed against the pound, and then against the yen. And then we have all these secondary impacts like all the other correlations. So we can see that the US dollar, and I'll remove myself temporarily from this. There we go. The US dollar has been extremely strong, pretty much beginning 2018 all the way up to the entry of the novel coronavirus into pretty much the US population, and where it really started to cause a stir. We see across the board that starting point around the world was generally observed as the 10th of March. We see a ton of volatility in the world, and that's what we see there, that impact of the dollar. But subsequently, the dollar's taken quite a knock since obviously the outbreak of the coronavirus. But you can also observe the momentum and the velocity at which the dollar had decreased in terms of its competing value has also started to slow down. So I want you guys to see this. So we have this new market formation, we have this downwards trend, markets moved down, didn't really correct or make a retracement. That might be a 23.6 or something like that, or 38.2 Fibonacci level. We can actually check it out. Okay, so it's a 50 fib, right? So it's a 50% retracement. So nothing big, nothing worthwhile writing home about. This next one, we start to see a bit of a correction. So we start to see a retracement to a known level, and we see that level is the 78.6. Great stuff. Now, what is interesting about this next state of market that we're in, this next leg, and we've been in a bull leg on the dollar pretty much since the end of May. So June, July, and now moving into the start of August, we have been in this bull leg on this dollar. So what is noteworthy about this, and why am I taking this into consideration, and why does this support a dollar short position? One of my master students, I think it was Sis Angie, Angie, if you're in here, let me know, asked me yesterday, or said that she's looking for a potential buy opportunity on gold, and it's very hard in text to explain all of these items, but this is why I'm cautious on a buy on gold, for this reason here. Right, if you look at this next leg, there's the impulse, here's the correction, right? This correction at the moment is not only already broken through that 88.2, but it's essentially targeting the next levels towards the top side. Now, if we get a move up to this 100% level, there's a great likelihood that this bear move is now dead. Okay, and that we may be in a new state of market. You can also see this as a representation like this, and this will mean that all dollar related setups, so if dollar is the base currency, we could see those currencies move in an upwards trajectory, get long or buy. If the dollar is the quote currency, we could see those currencies move towards the downside. You could also visualize it in this way. I'm just going to check where this level is. Okay, so I think you guys can see that quite clearly in terms of this market structure we have here, adhering to this level. Now again, we've broken through that diagonal, that trend line. Okay, we did have some hesitation, but that long-term buy is obviously what we want to look at. Now again, should we start to break through or make a higher high, right? Because at the moment, a downwards trend, lower highs, lower lows, right? That's what a downwards trend is and how it works. But should we move into a position where this challenges the previous high, we could be looking at a really strong dollar over the next quarter. So again, that downside on gold is looking really good. Again, depending what we get in crude oil inventories, again, the fundamentals don't always tie up. We don't want to wait for the fundamentals, but it's great when the fundamentals support our position in terms of what we want to do. Okay, so that now that you guys have a bigger and better idea, yeah, and check in terms of gold has just continued that downside move there. I see Gilbert says he's Child of God. I think it's Child of God. Sis Angie. I don't know. I'm not 100% sure. I think it's Angie. Oh no, there's Angie there. Okay, Angie. So Child of God's also in a sell. So if you're in a sell on gold, you've already made money. You should already be 30-40 pips in profits in terms of that. But that's why I have that sell outlook on gold. I said wants to hit one of my TPs, but I'm going to be greedy and allow my TPs to run. This could potentially still yield, in terms of its entry, yeah, well over 300 pips per position here. Okay, cool. So that's what's happening on gold. In terms of this, we're going to keep monitoring. There may still be a smaller buy that comes in, and I'm going to tighten my alerts now in this area that we are, so we do not miss it if it ends up popping off. Okay, so the dollar index, does everybody understand what's happening with the dollar index in terms of this? And I think this is going to be very important because so many things are dollar based, right? VIX has got a dollar bias, gold has got a dollar bias. A lot of the things we do has a dollar bias. Now, in terms of moving, and just let me know, guys, is everybody on the same page here? Guys, you're welcome to go crazy in the chat. I will make sure that I comment and see everything that you guys are busy saying. Very, very important. Okay, so this thing gave me stress this morning, guys, or this afternoon. Okay, so next thing I want to look at, guys, is we spoke about this yesterday, but I want to talk about Euro USD. If you guys don't have the setup already, please make sure that you complete the series, right? Make sure that you get to the episode 7 of 7 or part 7 of 7. Go through the thing. I noticed, I'm looking at everybody's watch times in terms of how much everybody's watching of each video, and the video that people are skipping the most, which blows my mind, is risk management. I've got no idea. The first video has got massive views. The views are quite delayed by 24 hours. So the views you're seeing and the actual views is quite different. But the thing that blows my mind, guys, is that the video that people are skipping is risk management. Like, I've literally said risk management in this thing a million times. So please make sure you follow the series, get through the videos, watch them at 1.5 times the speed, whatever you've got to do, and make sure you watch risk management. Then you get into part 707, and this EURUSD setup is there. Now, for my master students, I'm going to be giving you guys this template, right? So all my trading setups, I'm going to be giving you my templates. I'm going to be dropping it into the group directly after this live session ends in 15 minutes or so. Okay, so I'll be dropping this template for you directly within the group itself. So make sure you do have the setup. Now, VIX. Everybody wants VIX. Everybody wants to talk about VIX. Everybody wants to trade VIX. I know, me too. I love VIX. Absolutely bangs. All right. So again, really quickly, please make sure, guys, I'm going to send my master students my EURUSD setup. But please, if you're watching this live, how many people have not started the Quantum Growth series? I just want to see if there's anybody that's live with us that has not started the Quantum Growth series. So I think instead of asking who hasn't started, please, guys, if you've started the Quantum Growth program, put your hand up, say I'm in it, I'm studying, I'm doing my thing, and what part of 7 are you in? I just want to see that in the chats. Let me know where you are in terms of the whole thing. Let me know. Okay. For everybody else, guys, you can follow step by step in part 7, drawing everything the way I've drawn it. You're going to have a ton of fun. Okay, moving into VIX, guys. Let's have a look. I did hear an alert for gold. Gold is just continuing to smash the downside. Again, if you took it live with me yesterday, we've protected our position now. Gold, like I said, could continue to fall. You don't have to open, close, day in, day out. You can actually have a life. You can do things and trade at the same time. It is that easy. Gold is falling like an absolute machine. Okay, so people have started. I just want to see who is not started. If you haven't started yet, guys, go to the channel, start the playlist. Start on video 1 all the way up to 7. It's 8 hours of content. It's absolutely free. And you're going to see me like you're seeing me now, but we're going to go over the theory and the syllabus. Okay, so VIX, everybody wants to know about VIX. Here is your setup. This is what's going to happen, and this is how VIX is going to break out in the course of today. Now, I am expecting a buy on VIX. I'm expecting a buy on VIX. But in order to get that buy going, right, I am seeing resistance here. I would like to see VIX come down to a little bit of a lower level. So again, if you are trading with me on Trade 245, you followed the link, you've got your account, I'm looking for an entry at 341177, right? So 341177. And what I am estimating here to happen, remember those of you who we spoke about it yesterday, let's go to yesterday's position or yesterday's potential outlook. Let's go out. I think we were working, or I might have cleared that chart. Okay, so yesterday we looked at a potential buy on VIX. Again, and answering Gilbert's question, because this does come up quite often. A lot of people ask me, okay, but how do they time better entries? How do they time getting in the market? So yesterday on VIX, I'm gonna drop down to a 5 minute just to show you guys something. So yesterday we had a structure something like that, if you guys remember correctly. For master students that were live with me yesterday, please let me know if you guys remember the structure. And we were sitting around about somewhere there. We did also set an alert. I took a nap, I heard it going off in the background and I missed it. But essentially I've told you guys that if we get out of that structure, we're gonna have that massive buy. And I saw a couple of you absolutely smashing the market. Master students, you guys smashed it. I can't remember who it was. I'll double check my chats, but one of you guys absolutely smashed it. You slap that market around like it owes you money, and I love it. That's the way it's supposed to be. And we're ultimately looking for the same thing today, except we have a little bit of a neater structure. We did not have an area of support here that was giving us great data. From a support perspective, there's some diagonal there, but we didn't have a greater bunch of data here. But again, as you guys know, descending channel we want to break up, but we couldn't pull a fib level to understand where that break was going to happen, but here we can. Okay, so having a look at VIX at the moment, we can see that VIX went through that 61.8 and is looking for that target of that 78.6. Didn't quite make it, but the 61.8 is most likely the most valuable area here. In terms of the next move, let's see. Okay, then we get that 78.6 touch. Now let me show you how to time your entry for a buy on VIX now as we currently sit. Okay, in terms of this move over here that we're seeing, I did have a smaller structure that we're given a immediate opportunity for buying, but that happened just before we had to go live. So how would we time this now, right? So we would need to then look at this move up, and we want to see a press down to this value. Now, a press down to this value will make a lot of people think that the structure is breaking, but it's not. Okay, so that 78.6 is where we would want to essentially get that buy opportunity. Now, we can do this a couple ways. If you guys want to follow me on this one, you will need to do risk management for your particular account. So just to give you the math, right? If you open a 0.01, you've got a dollar-based account, and you open a 0.01 on VIX, that will require a $20 margin. Okay, so it's going to use $20 of margin. Now a 0.01, we're going to set up our pending order now to look at the pips and things like that, and you need to then apply appropriate risk management on your side. Again, if you don't have a VIX account or you're not seeing what I'm seeing, go to the videos, go down in the link, open up a live account with the broker that I've given you, and download the MT5, and you can follow me in all of these trades. So what we're going to do over here is we're going to set up a pending order for a buy limit on VIX, and we're going to look for a 0.01 and the price that we're going to enter in, and I'm looking for entry. Now remember, VIX has got quite a spread, right? So if you're too greedy, it will not activate. So we are going to look for, we're going to set up a safe order now, and we're going to set it up at, I like round numbers, so let's just set it off at 341 flat. So 341,000 flat, so 3.341000, and we're going to look for a stop loss below the 100% level, because that's where we need to get out of that trade. It's below the next support level, it's below, so it's technically below two supports. Our immediate support, the next support, and the 100 level then would be a support below that. So our stop loss would need to be registered at 340,300. 340,300. And again, as I've taught you guys in chapter 7, this is where you measure, can you afford to take this trade, yes or no. In terms of a TP, we're going to look at around about 345 flat, and we're going to go ahead and place that order. Now in terms of this trade, again, I'm showing you guys on a 0.01 so you can do your risk management. At 0.01, you're looking at about, yeah, it's not bad at all. You're looking at about a $7 stop loss. So on $100, you can't take this trade because A, it's going to chew a $20 margin, and you're looking at about a $7 stop loss. That's 7% of your account. And the TP here will be around about $40. So we're risking 7 to make 40. That's a 1-to-8 risk reward ratio, exactly where we want to be. Now, but remember, right, this is a 5-minute time frame. If VIX breaks out of this structure here, we know with VIX, when VIX breaks, VIX trends, and we do have a top side all the way back to this market structure over here. Oh, listen, bonus question, right? For any of you guys, did you guys notice if you finished chapter 7, I started off this exercise by doing a quick test for you guys on chapter 7? And do you guys remember the structure? I drew a level here and I said, okay, VIX will come up and retest. That's where we will take a sell limit. Did anybody see that and how it actually reacted up at this level? Anyway, I'm just blowing my own horn there. But anyway, we could see VIX at least get back up to the structure, and then obviously it needs to decide where it's going to go long term, because we're on this long term bull structure. This is an attempted breakout, so we may end up seeing a market formation that does something like this, back up to structure, and then again back down to a known level, and that level will then end up being something like this. So we'll end up coming down somewhere there as an example, before the new structural new trend ends up giving us its position. So that's what I would do on VIX. I'm going to leave my order there because I'm happy with that order right where it's at. Again, I'm on a 5 minutes to get the detail. We can expect a bit of a push down this afternoon and then a trigger of that order. Should we not get that push down, should we not get price getting back down to where we are now, we could then look for a breakout opportunity. Now, a breakout opportunity would mean we would need to look for a trade above that level there. So on a 5 minute time frame, you're going to link up those three highs. That's the immediate next resistance we have above us, and we would then look for an opportunity above that. So a breakout above that would then potentially trend all the way top side. Now, just to give you an indication from a pips perspective, VIX at the moment, if we reach our targets in terms of this particular trade setup, we're risking $7, which is 70 pips, and we're potentially looking at making about 400 pips on this trade towards the top side. $40, 400 pips. Yeah, so we're looking at about 400 pips if you use the standard 10 cents for every 0.01. So that's the VIX setup. And just Gilbert, so that we're on the same page, all you've got to do is understand that market structure and go deeper, build solid structures around it, but again, make sure it's supported by the bigger market view. I would say specifically something like VIX, you need at least some sense being made on at least 15 minutes. If you're only making sense on 5 minutes, you've got no underlying support and resistance that are going to help you take this trade long term. Now, again, we're talking about VIX. If you took this at 0.01, right, there's a yield of $40, let's say, but if you got a 0.1 yield of 400 US, that can happen in the next 2-3 hours, and if it's a standard lot, looking at about $4,000 over the next little bit. Again, risk management will determine what you can afford to take and what you cannot afford to take. Now, ZAR is a very interesting one, guys. I'd really like us to talk about this before we end up wrapping up today's session. I'm leaving my pending order in for VIX. I've got a nice gold sell on my hands. It would be nice to see what VIX can end up achieving, and then we will obviously have a look there. We should all still be in that Euro USD position, and let's look at USD ZAR. So USD ZAR, we can see long term 2011 to 2021. Is it 2011 or 2000? Yeah, 2011 to 2021. ZAR has been losing value substantially against most other setups. Now, what I want you to notice is that whenever we've come back down to this median, right? So this blue level here is the trend, the market structure for ZAR. Once we've satisfied and got back down to this level, we see this next spike happen, right? So we see spike 1, spike 2, and spike 3. That's why I've been telling people that I do see the South African Rand getting past 20 Rand to the dollar in the next little while, and definitely before potentially even the year ends. Now, the reason why there's been a little bit delay on that is that this area over here, where the South African Rand was supposed to come back, touch, and then break through, it didn't. It actually came through temporarily. And this is the time when coronavirus is going crazy, hospitals are flooded, we're going into harsher levels of lockdown. We're seeing business liquidations at an all-time high, unemployment at an all-time high, and the Rand's getting stronger. And I'm looking at this and I'm like, okay, so currency is really screwed then. I mean, if none of the fundamentals apply and something is still getting stronger, we have a problem. Now, it was expected this would normalize, and it is starting to normalize. Now, the hopeful thing that I have here, and there's a bit of a setup I want to talk about. I'm going to go back to a daily time frame. Now, this level over here, this 14 Rand 50 is a psychological support for USD ZAR. 14.50 is where I called it. I didn't think it would go past 14.50 as a sell, but it broke through and then trended sort of towards the downside. we've broken through that 1450 mark in the last day, which is a good thing. Now remember, we got positive data. The South African Rand PPI is doing good. We got all these things on the up and up, and the ZAR is getting hammered, partly due to the dollar strength, but still ZAR is getting hammered. So ignoring all other things, and we just look at the fundamentals, this is what I'm busy seeing at the moment, and I think we're going to have a pretty good trade on our hands. So I'm going to drop down to an hourly, and what I'm seeing here is that we have a massive potential to potentially retrace a little bit, right? So we have a little bit of a scalp for a potential sell opportunity, and that scalp we can identify in a manner very similar to that. Okay, so I'll zoom in on that. So that is our potential scalp. So if we break this directional trend line, you guys can follow this. There's an hourly time frame. Our double stochastic is definitely telling us that it's a high likelihood. If you don't have the indicator, go to chapter 7 of part 7 of 7, and in the description below you'll be able to download my templates as well as my indicators. So should we get a break here, there's a great opportunity for a scalp, but ultimately this would be what we would be looking for from a buy perspective. Now, this is still looking like a correction and not yet like an impulse. We want to see this as an impulse. We want to see nice, solid moves, small pullbacks, solid moves, pullbacks. We're not getting that, right? We're getting this little bit of a sidewinding market, but this is what we ideally want to see. Now, I am seeing a little bit of a struggle on ZAR to really get higher than where we're currently at, but we do have a much bigger structure that is at play that's supporting us here. Let's have a look at it. Okay, so outside of that smaller structure that we've just seen here, we do have the sideways market. I'm cutting that off over there because I do believe it was a little bit of a something along this region. The reason why I'm cutting that off too is if you drop down to a 30-minute, you'll see why. Let's get into it. So you can see there, we were actually supposed to end that market there. We broke above, held out temporarily, and then fell back down. So that's the reason why I'm cutting that piece out. And you just, over time, people ask me these questions, but guys, to be honest with you, it just takes time. You start to see these things with the eyes. So where we are right now, we're approaching that ceiling. I would love a long-term position outside of this area towards the top side. But again, that's something you guys need to gauge how you're feeling from a comfortability perspective. We've crossed that Fibonacci fan that we've got marked out on a daily that was really acting as a bit of dynamic resistance. So over here, we've got that Fib fan giving us that dynamic resistance, and that was the 88.2. So the 88.2 Fib fan is the last angle within the Fib fan levels that essentially tells us whether something is trending downwards. In this case, that Fib fan is breaking topside. I quickly want to flick over to the dollar because we're getting, there we go. Okay, so having a look at the dollar in terms of, we now hit that 3 o'clock mark. I'm still not going to look for anything in terms of a buy or a sell right now. We can actually see the volatility. So if you ever want to visualize or see volatility in graphic terms, open up a tick chart and you'll see it. Oh, let me move my head out the way. So that's volatility at its finest, right? So we can see there's a ton happening in the market. Volatility is good for us as traders, but not when it hasn't decided a direction as yet. It can cause us to be in a position where you're just waiting around. But I'm not going to look for a buy here. To be honest with you, based on what I'm seeing here, I would probably end up looking for continuing more short opportunities. But just getting back to ZAR, because I heard the notifications happen, you must understand we have this bigger picture at play here. Okay, so we want an early entry for a long-term trade. The thing I don't want you guys to get caught in here is I don't want you to get caught in a market where you buy and then you sit in a sideways movement for 3 trading weeks, right? Where you're utilizing a bit of your capital, a bit of your margin towards just a market that's moving sideways, because we have quite a bit of distance between us and our market structure in terms of support. We have quite a bit of distance there. That is all sitting all the way down at the 14 Rand flat mark. So this is just something I want you to observe. Again, all I want you to do is have this structure drawn out, then on a closer look, have that structure drawn out, and a breaking of either of these two could signal an entry for either a sell or a buy, and you need to just wait for that to materialize. So we can follow the same rule here. We can set up an alert north and south of that mark, and then we are pretty much good to go. So let me check the questions out really quickly. Alright, I'd like to be super brave and say it's your side, because this thing is streaming in like some crazy, I'm streaming like 9,000 kilobits a second. So I'm hoping it's your side. I'm not hoping it's your side, that's mean, but I'm pretty sure it's your side. Okay, Angie started this morning. Alex is on number, what is Alex on? Jay's on part 3, Alex is number 4. Guys, if you haven't, make sure you started that series. And if you're watching me live right now, make sure you hit that subscribe button, bell notification. You never miss any of our live sessions. I'll be doing a live session this evening, trading a little bit, gaming a little bit, speaking with my friends, speaking with the community, and just hanging out, having a good time. I'll let you guys know what time that is. But to be safe, make sure that bell notification icon is on. Okay, so that's what I'm seeing in terms of opportunities. This is where my focus is going to be. In terms of Euro USD, we are in. Gold, we are still in. Again, there we go. It's really struggling top side. We want to wait for that 330 confirmation and see what's doing at 330. But this thing could definitely continue to sell. Keep an eye on the dollar index. And then we definitely want to look at and keep an eye on VIX. So VIX has tried to push through at the moment, but I do believe we're going to get that turnaround here. Now, the reason why I'm also waiting, guys, for that, I'll give you guys a bonus tip. Actually, this is only for my master students. Okay, so if you're not a master student, look away. I don't know if that works. If you're not a master student, look away, right? We see that we start to get this 530 reversal on VIX, okay, marked off by these two levels here. 530, as soon as VIX is at a major resistance / support level, we get that major reversal at 530. So that's the reason why I'm cautious about a buy here and now. I would like to wait for that 530 mark to materialize. Now on your charts, it will represent as 1630, and we know that even if you're on a 15-minute time frame, that's an hour ahead of time, so it actually represents the 530 candle. So I'm more likely going to wait for the 530 mark to trade VIX. If it breaks out, I'll reassess at 530 in terms of taking that buy, but at the moment I do believe we get a push down, grab that sell, and if it takes us out, again, we're risking 1%. You should be at 1% of your account to risk reward here of about 8. So risking 1 to make 8% in a shot is the way to go. Guys, if you're looking for Child of God, if you're looking for the broker, go to broker section of the syllabus, and then I think that's video 3 or 4, and I explain what it's all about. There's links down below. You can open up a live account, be with us, download the trading platform, see what I see, and then obviously you are good to go with every single one of us. Okay guys, I'm going to answer a few last questions before we wrap up. So you are welcome to, if you got a question, post it. I'm going to be answering and be looking into those questions. Okay, so you got a few minutes, just drop your question in as we wrap up. And always guys, I'll keep repeating this. I thought it was a simple thing that when people watch a video, they know to subscribe, but in some of the videos we received a couple hundred views, and less than 20% of those views were from subscribed people. So I keep reiterating, if you are subscribed, I apologize for saying the same thing over and over, but it is super important. Child of God, have you subscribed? Have you hit the subscribe button? I'm now suspicious of you. I'm now very suspicious. Child of God, have you hit the subscribe button? I'm now suspicious. I'm very suspicious. Mimosa, the Nova site is no longer up. Nova no longer exists. I don't know where you've been for the longest of time. That was 4 months ago. Everything is now on the channel. On this channel you're watching me on right now. All the content I've released for free. There's no more payments. There's no more anything like that in terms of the content. Okay. Okay, so Lorato's asking what's my take on Ethereum. I think she's referring to Ethereum Lite or referring to Litecoin, and Bitcoin dropping to 26. Yes, so I won't analyze the cryptos here. I don't have access to that on my particular chart right now, and I haven't prepared in this platform. So I would love to know specifically if you are a master student. I'd love to get your questions before the show starts or as it's starting. Anything you're thinking of, so as I'm seeing those questions roll in, I can make sure we are sorted. Mimosa, have you subscribed? Let me know, because now I'm also suspicious of you. Everybody's a suspect today. Everybody's a suspect. Mimosa, make sure you have subscribed. It's important. Okay, beautiful. So guys, outside of that, those are the things I'm busy seeing. I'm seeing a lot of other opportunities right now, but as we wrap up this month, I want to take it easy. I want to get into the flow of things, getting used to spending time with you guys every day. My master students, as you know, I'm with you live every Tuesday, Wednesday, and Thursday. And for everybody else that's in our free environment, you know that I'm live with you every Wednesday. This is where you get to spend some time. It's not going to be rushed. It's not going to be this crazy thing. It's in essence something we take time with. Abel, the master's course is closed. I'm not taking in any more master students as of yet. I'll let you know if I do. I want to keep a focus on a very small group of people, and then eventually open up masters at some point. I don't know. Actually, the masters themselves, they'll decide really at the end of the day. So masters, unfortunately, right now is closed. They're going to have a separate syllabus launching this weekend, which takes the current one and goes deeper into all of these subjects, but it's not yet available for enrollment as of yet. Okay, beautiful guys. So I think if there's no longer any more questions, I've answered pretty much everybody who had a question. And then Mark Hooper. So Mark was a suspect the whole time. Mark's been watching the whole time and he's only subscribing now. Imagine. Welcome, Mark. Welcome to the DVDM family, my brother. Okay, beautiful. So there's no other questions, guys. Then I think we are good to go. Mark, just a update for you as well. I did speak with the guys from Trade 245, and she said she would get your account sorted out. I think somebody's actually supposed to call you, to be honest with you. Let me double check. Yeah, they're gonna get someone to give you a call. Okay, so beautiful. Golex charting video. Charting doesn't talk about profits. Golex, you've got to move on and progress into risk management. I think it's video 6 or 7. No, it's definitely 5 or 6. I go into risk management. It's its own video, and I spend about an hour showing you how to calculate from a pip into a dollar value and how to tie that back into your account. Golex, are you subscribed? Now I'm suspicious of everybody. If Mark Hooper was not subscribed as yet, but then anybody can be not subscribed, and I don't know. Okay, let's just see here. Jay, what's up, my buddy? Mimosa saying she is subscribed. Okay, so I take that back. You're no longer a suspect. So Mimosa is no longer a suspect. But let's see here. Golex Animations. Golex Animations, what do you do? Do you do animations? I need animations. Let us know, but make sure you're subscribed. I don't want animations if you're not subscribed. If you subscribe, then yeah, I want animations. You let me know. Let me know. Okay, beautiful guys. Outside of that, I will notify you if you're in the groups. Remember guys, you got to be in the groups. The link for the groups is at the end of the 7th video, so make sure you get to the end. Down below you'll see a Telegram link. Jump in, you'll get into the DVDM markets group. I will update you guys when the oil inventory data comes out. When that comes out, I'll pop an update. It'll either be a voice note or a video or a text in terms of what I'm seeing then, how that could potentially further affect our gold positions. But in terms of where we're currently sitting, I think gold will more than likely potentially continue to sell at this point. There's a lot of rejection in terms of it getting any higher. VIX is hovering, so please make sure you are monitoring VIX. And ZAR, I'm going to look for us to end up getting in a long-term position. So masters, I'll share with you, I did share with you my VIX template already a few hours ago. I will share with you Euro USD, and I'll share with you ZAR, and I'll share with you gold. I'll give you guys all the templates in the masters group. Guys, to everybody else, thank you for joining us. For everybody else, I will be seeing you guys next week, Wednesday. We will structure the shows to be a weekly outlook in terms of what's happening this week, coming up, and what had happened the previous week in terms of a little bit of a recap, so you guys are all aware where we're at. For the time being, make sure you go through your syllabus again, and I'm sorry for repeating it. Make sure you subscribed to the channel and that you've hit that bell notification icon. Okay, Golix is subscribed, so inbox me about your animations. I want to see what you do. Outside of that, guys, you must have an absolutely beautiful day. As always, trade safe. Much love from my side, and ultimately enjoy. And I'll see you guys a little bit later. For my master students, I'll see you guys live tomorrow at 2 o'clock. We'll be deploying some dollar domination again on gold, and we're going to look for more VIX opportunities. Outside of that, guys, enjoy the music as I play you out. Drop in the chat, make sure you say bye. It's rude to just leave, and I'll see you guys all a little bit later. Shalom.